Hey guys, Carmine here, co-founder of Stratacapital. Wanted to talk a little bit today about securities-backed line of credit, also known as an SBLOC. I was actually having a conversation with a friend over the last couple of days, and I was talking to him. He seemed a little bummed out, so I was, asking him, "Hey, what's going on?" Basically said that him and his brother are working on this real estate deal. They're not sure if it's going to be a flip or if it's going to be a rental property. But long story short, he's kind of short on cash, right? He has money tied up in other real estate deals. He has investments. He doesn't have the money to make it go through, right? And they can't get a mortgage on this soon enough before they have to actually make a bid on the property. So I was talking to him, and through conversation, I said, "Hey, you have that investment account. Why don't you take a line of credit against those investments?" And his face kind of like lit up. I guess he didn't really realize he can do that. But essentially, what you can do with the securities-backed line of credit is you can take your brokerage account. It cannot be a retirement account, and you can actually use that as collateral and take a loan out against the securities, right? Now, depending on the mix of what you own, stocks, bonds, mutual funds, ETFs, there's a percentage of how much you can borrow. Usually it's around 50%. So what my friend was able to do, he looked at it, he was able to get around 50%, a little more actually. But what did this enable him to do, right? Well, one, it allowed him to actually move forward with the deal, right? He's going to be able to get the cash to put down with his brother. And two, his investments are staying invested, right? He doesn't have to sell out of any investments. By doing that, you lose exposure to the market. You also might have to pay taxes. So that can stay invested. He just has to make the payments on, obviously, the loan. And what's really cool, too, is once this property goes through, so say it is a rental, they can use the rental income he can use his portion of the rental income to pay down the SBLOC, or he can take a mortgage out from that property once it's set up and actually pay off the SBLOC. Obviously, you want to see what interest rates higher or lower and do the math on that. In addition, if it's a flip, just use it as a bridge loan. And then once you sell the property, pay off the SBLOC, keep the line open, and do it again. So underrated strategy to use. A lot of our clients are using it. So hope that you found this helpful. Please submit any other questions you'd want answered. Talk to you guys soon.